Ladies and gentlemen, good day and welcome to NOCIL Limited Q1 FY23 earnings conference call. This conference will begin shortly. We would request all participants to stay connected. Ladies and gentlemen, please stay connected for the earnings conference call of NOCIL Limited. The call will start shortly. Thank you. Ladies and gentlemen, good day and welcome to NOCIL Limited Q1 FY23 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. S.R. Dio, Managing Director of NOCIL Limited. Thank you, and over to you, sir.
Thank you. Good morning and very warm welcome to everyone present on the call. Along with me, I have Mr. P. Srinivasan, our Chief Financial Officer, and SGA, our Investment Relations Advisors. Hope you all have received our investor presentation by now. For those who have not, you can view them on the stock exchanges and company website. I hope you and your loved ones are safe and doing well. We'll start with the performance of Q1 FY23. We have achieved highest ever volume growth during this quarter. Good volume growth on the back of some easing in supply chain resulted in a record high quarterly revenue of rupees 509 crores. This increase in revenue comes on the heels of a 17% increase in volume in Q1 FY23 as compared to Q1 FY22 and sequential growth of 12 to 13%. This was largely due to good demand uptick from tire companies on account of improvement in both OEM and replacement markets. As mentioned in our investor presentation, we could largely maintain flattish selling prices for large part of our production portfolio. On the production front, we could utilize our plants around 75% of our installed capacity. Most raw material prices were flattish for the quarter. In a few products, due to domestic situation, few abnormalities got experienced. The quarter also witnessed some increasing utilities cost due to increasing gas and coal prices. As you all are aware that in view of the Russian-Ukraine war situation, there have been disturbances, particularly on the energy front. Its impact is visible across the globe in the form of higher inflation, higher interest rates, and recessionary trend. This is also endorsed by IRSG, wherein for the quarter Jan to March 22, most major markets shown a degrowth of 1 to 3%, the only exception being India and USA. Southeast Asian markets shown a degrowth of 10%. Further, based on the interactions with customer, we do believe that the coming few months may see some muted demand. However, we are confident that on an overall basis, the volume for H1 FY23 will be higher by around 10%. Quickly on the industry scenario, keeping in mind our long-term vision of capturing double-digit market share, we are envisaging growth opportunities for our rubber chemicals business in the global space. To pursue the said objective, we intend to optimize the capacity utilization, say by September 23. However, keeping in mind the short-term recessionary outlook, we believe that this can get extended by another 3 to 6 months. To meet the shortfall thereafter, we have already started debottlenecking of certain capacities. This exercise may take about 12 months, which will help us to meet the demand for another 1 to 2 years. At the same time, we are evaluating capacity expansion plans to achieve our long-term vision. Execution shall be decided once the global business environment stabilizes. This is from my side. Now I would hand over to Mr. P. Srinivasan to give you an update on the financial performance. Thank you very much. Shini, over to you.
Thank you, Mr. Dev, and good morning, everyone. Hope you all are safe and in good health. Just to recapitulate the Q1 FY23 performance, we have registered the highest ever quarterly revenue and volumes. This is already explained by Mr. Dev on the back of better sales volume during the quarter. Some of the financial highlights. Volumes grew in this quarter by 51%, taking base as Q1 FY20. So when we are looking at quarter June 19, it was 100. Today we are at 151. On a sequential basis, it is about 12 to 13%. During the quarter, we saw volume growth largely from domestic business as there has been changes in the geographical dynamics. Net revenue from operations stood at for the quarter 509 crores as against 462 crores for Q4 FY22, a sequential growth of 10%. To recapitulate, this is the highest ever revenue parameters for NOCIL rubber chemicals. The sales growth was largely driven volume growth across product segment during the quarter. On the operating EBITDA performance for the quarter stood at 101 crores as against 73 crores in Q1 FY22, a YOY growth of 39%, and 111 crores in Q4 FY22, a degrowth or sequential degrowth of 8% on a QOQ sequential quarter basis. EBITDA margin for the quarter stood at 20% in Q1 FY23 as compared to 21% in Q1 FY22 and 24% in Q4 FY22. Profit before tax or the PBT for Q1 FY23 stood at 88.49 crores as compared to 63.19 crores in Q1 FY22 and 95.24 crores in Q4 FY22. The profit after tax for Q1 FY23 stood at 65.63 crores as compared to 47.08 crores in Q1 FY22 and 68.47 crores in Q4 FY22. That's it from our financial front. So with this, we would like to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity and congratulations for another good quarter. So my first question is on the RM side. You indicated on a QOQ basis, RM has been flattish. What has been trend during the ongoing quarter, and what do we expect that the RM prices will start alleviating incrementally? Thank you.
Rohit, I think this is a very difficult question to predict because currently, if you really see, I think there is a huge amount of instability which we see in the world market. The oil prices are fluctuating, the petrochemical derivatives are fluctuating. So, I think to predict the oil prices and guess the oil prices and petrochemical derivatives is going to be a big hazard, and we could be wrong for that guess. However, if you ask me for a month or so, I think they look flattish, but that's a very small time frame. Okay. We'll not be able to guess it for maybe 2 months after or 3 months after.
Sure. Got it. So the second question is on the debottlenecking. So you said probably it will take another 12 months and it will be sufficient for next 1 to 2 years growth. What is the capex that we are envisaging for this? And second, we had also indicated in the past that we will be working on some other products as well. So any status update on the same? Thank you.
See, as far as the debottlenecking is concerned, it's always low-hanging fruit. So the capex involved is very small, okay? And that's precisely what we are trying to do. As far as the long-term vision is concerned, I think it continues to be, as I said, that we want to establish ourselves as a substantially major player in the world market, and we are working on that.
Right, sir. Got it. Thank you so much, and the best of luck, sir.
Thank you. The next question is from the line of Aditya Khetan from Smith Limited. Please go ahead.
Yeah, thank you for the opportunity, sir. So my first question is on the spread part. So this quarter also, sir, our EBITDA spread is roughly around 65 per kilo, although lower than last quarter, but still higher than our average. So just wanted to know, so is this benefit that has been largely led by the inventory gains, or actually the spread for the industry has improved?
I don't know, Aditya, I'm not able to understand from where you come to the figure of 65 per kg or something. I think that's...
Are your volumes for the quarter, means your EBITDA that are divided by the volumes?
So I somewhere I think your calculation, maybe please have a check at it, relook at it, that we can answer it separately. Secondly, the performance on the business industry perspective, you have to look at what is the global trend in the last 6 to 9 months. And when you look at, and we have been communicating in the past or even today also, that most of the price corrections are happening in commensurate with the raw material price movements. And that has been the trend which we have witnessed for the last 18 months. And your Chinese competitors are also doing it, and we, being also a significant player in this industry, we also take corrective actions based on that trend.
Okay. So, sir, the benefit has, so that has been largely led by the spread for the industry has only improved. Means this has been not led by the low-cost inventory, means you mean to say that?
There could be few cases here and there, but that's not significant to talk about.
Okay. Sir, second question, sir. Now we are witnessing that the pricing decline in majority of the raw materials, whether it is aniline or other, and similar correction we are also witnessing into the rubber accelerator prices also. So can we make a case that the spread will normalize towards around 45 to 50 rupees per kilo for the coming quarters?
Well, one cannot be very specific about those numbers because it depends on the situation, the customer profile, the product profile. So what we are seeing is the price corrections, if at all it is happening, it happens along with the cost movements.
Okay. And so, and Mr. Deo has said in his initial remarks that the utilization for the quarter is around 75%. But sir, considering there is 11 to 12% volume growth on quarter basis, so that utilization should be around 85% for the quarter at least. In last quarter also we had utilized around 75%, and considering 11% volume growth, so this should be easily around 85%. So just wanted to clarify on this part.
Gentlemen, I think, however, if you look at the March quarter results, there was an inventory change of credit of 36 crores. Maybe if you adjust that, possibly all your questions get answered.
Okay, sure, sir. Sure, sir. That's it from my side.
Thank you. The next question is from the line of Nitesh Dhut from Prabhudas Lilladher. Please go ahead.
Hi, sir. Congratulations on a good Q1 performance. So my first question is on the strong volume growth in domestic market. So what we understand is that the imports of rubber chemicals into India had slowed down in Q1, and NOCIL has substituted that demand. So was this slowing of imports temporary in nature, owing to some production or cost challenges for the players exporting into India, or is there some other, is there some structural change?
I think this is a question which should be asked to Chinese manufacturers because what they were doing over there.
No, sir. In fact, what I observe is that the slowing exports is not from China, but I think from some other geographies.
Yeah.
So overall, if you see the numbers, that has slowed down, but it's not necessarily from China. So, any sense that you have on the overall, imports slowing down into India?
No, I think first and foremost thing, most of the imports which come in India in rubber chemicals, they mostly come from China.
Correct.
Okay. The imports from other geographies are very, very small.
Yeah, so that has actually, slowed down is what I see. So China is largely, flattish to my understanding. And whatever comes from the other geographies, that has slowed down, and that is what has been substituted by NOCIL. That's the broad number. So
I think this question should be addressed to our customers because what is going to be their strategy in terms of their procurement, how they are going to import, or how much they are going to buy from domestic market. Okay, it's a typical procurement strategy from the customers, and we hope that this procurement strategy will continue.
Just to add a bit, I think, gentlemen, I would like you to clarify because what happens is when you are looking at an import data, you are looking at an HS code. But in case of rubber chemicals, you cannot look at HS code as the standard because there are so many items coming under the rubber compounds or rubber accelerators. So there could be some products which may not be necessarily rubber chemicals in which we are playing, and there could be some products which you are not been capturing in other chapters. So it's important to understand the overall scheme of things. Then only we will be in a better position to comment on that.
Sure. Okay. So my next question is on your share of exports in Q1. What would be the share of exports? Exports contribution to your revenue or volume?
Yeah, 1 second. I will just tell you. Exports, I think 35 or... it's about 165 crores.
165 crores. Okay. Sir, just one more question. So on your depreciation number, what I see over the last 2 quarters, it has moved from 11 crore to 16 crores in Q4, and then in Q1 it has dipped from 16 to 14 crores. If you could just give some color on this movement up and down.
I don't know whether you have had the chance to look at the annual report. There is this fixed asset schedule or what we call as property, plant and equipment schedule. Under that schedule, we have given a note what is that pertains to, and what is a one-time correction and what is a recurring correction. That has been adequately explained. So my request is please refer that.
That's helpful. That's helpful. Thank you so much. I'll come back in the question queue for further questions.
Thank you. The next question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Sir, thanks a lot for the opportunity. So first question is that in terms of the debottlenecking, how much of the capacity, sir, will get expanded because of this?
I think I can't put a number, but I have made it very clear that we continue to look at the growth. We continue to look at which product may have a shortfall after maybe 23rd September or 24th March, and we continue to debottleneck the plant. So putting a number is difficult. The only thing we can very confidently say that by debottlenecking, we will be able to meet the demand of next 1 to 2 years beyond our current capacity utilization.
Oh, okay. So that means, sir, like, you know, at least the volume growth would be at least 10%, right? And when we say that, no, that capacity will be sufficient for 2 years from there on.
Yes.
I mean, because of the debottlenecking, are we talking about like at least 70-80% kind of a capacity expansion then from the current level?
No, it doesn't require 70-80%. If you take a growth of 8 to 10%, I think you can really find out how much is the capacity expansion by debottlenecking.
Okay, so 25 to 30%.
Plan and the debottlenecking, no?
Okay, yeah. Okay. And how much of the land would be utilized currently at the current locations?
Current location, we have 2 locations. So one is Navi Mumbai, where the land utilization is practically 100%, and Dahej is about 50 to 60%.
Okay.
In other words, it has the scope for brownfield expansion.
Okay. And secondly, sir, just continuing to the last question, I mean, what we are trying to understand is that, like, you know, have we increased our market share in domestic from the current customers, like, you know, because of whatever supply chain issues were there in this current quarter?
I think we have been maintaining that 40 to 43% is the domestic market share. It moves a percentage here and there depending on the quarterly fluctuations. But we intend to consolidate it further as we go along. But today, that's what we can comment.
Okay. I mean, the point here is to understand, like, you know, the kind of domestic volume growth we had seen in this particular quarter. I mean, is this likely to continue given that the market share has inched up in the customers' kitty?
It all depends on how the demand outlook thing, and we will, if the demand is growing, we will definitely participate in that.
Okay, perfect. Thank you, sir.
Thank you. The next question is from the line of Dhaval Shah from Zurich Capital. Please go ahead.
Yeah, hello.
Yeah, good morning.
Hi, sir. Good morning. So just to understand the business a bit better, now if the raw material...
Louder, please.
Yeah, sorry, sir. If the raw material starts reducing and so is the selling price, the per ton or per kilo margins, we have seen a improvement as per your the way you have explained that you always strive to maintain the per unit margin. So now in a declining raw material scenario, will we be able to do that, or I just want to understand how the numbers will look?
It's difficult to predict the way it is going, but what we have seen so far the delta is being maintained by the over all the manufacturing players of this industry. So,
okay.
In a very contraction trend that is still maintained so far. So maybe as we go along, we'll understand, because it all depends on how the market is, how long if the recession is for a shorter period, one need not worry about it. But if it is for a longer period, that's a different issue altogether. So it all depends on how the demand outlook is, and it's a reflection of the capacity utilization and how much extra stock you have.
Correct. So now, sir, last quarter we saw China was under lockdown. So what change did you see in terms of the the production, the excess supply which was being not consumed in China, was it getting dumped in the other global markets, and how was the demand supply scenario in the global markets?
See, if you see their domestic rubber consumption, one doesn't see that much slowdown in China. It was a -3%. So when we are talking about a lockdown, the slowdown will be much deeper. But what we see is -3% rubber consumption in January to March. So one doesn't get a feeling. Maybe the domestic parameters must have been higher as compared to the exports. We don't know. As we see the data, we will come to comment on that. It all depends on how they participate in future. But what we are seeing is there is a shift in their strategy, and that is still continuing. I mean, we don't know whether they will go back to their old ways. We don't know. But so now, from November 20 onwards or October 20 onwards, we are seeing that strategy is continuing. They are adjusting their prices according to their raw material price movements.
Okay. And so you mentioned January to March, but April, May, June also there was, up and some lockdown was, some cities had, some was open. So even during that time also, you did not see much of, supply coming from there.
It was there. It was there. We cannot say that it was not there. But what we are trying to say is we have to see the data for January, April, June, then we can comment on it. Today we don't have the data. What we have the data is January, March rubber consumption from IRSG. On that basis, we are able to derive this conclusion.
Correct, sir. Got it. And sir, just last question. Any new capacities which have been announced or you feel can get announced in the near term, which will impact your expansion plans and
Those have already been announced in the marketplace by China Sunshine. I think that you guys, or most of the guys or investors are aware of it. And other than that, we have not seen any new announcements.
Okay. Thank you, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, good morning, sir. Just a couple of questions.
Sachin, your audio is not very clear.
Is it better now?
Yes, it is.
Yeah. If I see the presentation, then while your volumes have gone up by 10%, your revaluation is up by 2% quarter on quarter. So is it because of some lag in terms of passing the raw material prices or some product mix change? If you can comment on that.
Which slide you are referring to, gentlemen?
Slide number 5, sir.
Okay. Basically, if you recollect, in the last quarter, we had an inventory built up, number one. Number two, our capacity utilization in Jan-March quarter was higher as compared to the sales volume. So that had an inventory built up. And what we saw is in this quarter, as Mr. Dev explained at the starting in the opening remarks, most of the selling prices were flattish for the quarter as compared to January-March. However, on raw materials, few domestic inputs we had some abnormalities, and that did impact to an extent marginally the delta.
So should we take March quarter validation number as the stable number, or this quarter number is a more stable number?
I mean, how can we give a stability in the way the business environment is so volatile or so uncertainty? I think it's not proper to look at one quarter and take a reference point. We should look at an average trend, what is going on, and then take a call accordingly.
Sure. And secondly, you mentioned that the utilization this quarter was around 75%. You think what type of utilization and you also mentioned that because of the demand, you are looking at some debottlenecking. Practically, what type of utilization can you achieve at the current plants? It's like 90%, 95% from the existing capacity.
Gentlemen, I think Mr. Dev in his opening remarks addressed this question also. He said that our endeavor has been to utilize the capacity to the hilt by September 23. However, given the current short-term recessionary outlook, one can see a possibility of this getting extended by 3 to 6 months.
That I understood. My difference, I'm saying, can we operate the plants at 100% utilization if demand is there, or technically because the way the mix and all are there, we peak out at 90-95% pledge? That was my query.
It depends on plan. I think we can definitely, if there is a demand, we'll definitely operate at 100%. Why should we not?
Okay. Thank you.
Thank you. The next question is from the line of Saurabh Kapadia from Asian Market Securities. Please go ahead.
Thank you for the opportunity. Sir, the government in the notification rejected the anti-dumping on 3 products. So just wanted to understand, has the industry dynamic changed compared to last year versus this year, that anti-dumping is again not been implemented by government?
It's a policy of the central government which we are not privy to. But what we have been seeing a trend is most of the recommendations are being rejected. We are not unable to ascertain the real reasons for it. So it's not advisable to comment on this today.
But generally, industry dynamics in terms of competition or dumping, has there been some better condition in the current fiscal compared to last fiscal?
No, I think as far as the trade remedies are concerned, these are all trade remedial laws. This is a reflection of what has happened in a particular injury period. And on that basis, the Ministry of Commerce, through Director General Trade Remedies, comes to a conclusion there is a material injury or injury as per the trade treaties or WTO guidelines, and then they recommend. However, the central government have this ultra powers where they can take a view independent of what the law states. Then from a public interest or from another national interest, they can take a call which they can reject the recommendation.
Okay. So my other question is on the exports. Probably the export has been growth, but is it in the volume terms the growth in the domestic market was stronger this quarter compared to export?
Just a second. I think domestic growth in this quarter as compared to previous quarter, domestic growth was much higher in volume.
Okay. And sir, when should we expect because we have been guiding export should do well given the approvals or we moving from the third to the second stage of the customer list. So when should we expect the momentum in the exports to pick up? Although your initial comment suggests there is some slowdown, but ideally with the changes what NOCIL have witnessed over the last 2-3 quarters, we should be better off than the industry?
Our performance has always been better than the industry performance average. That's number one. Number two, on the exports trend, hitherto we were annually doing a 300 crore exports. Today we already touched the 650 mark. So that's already a reflection where we are in which direction we are heading for. And we have been communicating in the past, and even today we are like to reiterate that what we are today is 35% probably. Maybe tomorrow we will end up with 40%.
Oh, okay. And so just the last thing on the slowdown in the overall demand. So is it largely from Europe is what we are witnessing, or it's across the geography the slowdown trends have been seen?
It's across the geography. But I think one has to look at the global economic outlook of all countries. Every country is going through a rising inflation, rising interest rates. Obviously, this will result in some temporary setbacks. So this is a natural fallout of that.
Oh, okay, sir. Thank you, and all the best.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Thanks for the opportunity and
sorry to interrupt you, sir. Please request you to please stay connected. We'll also line for the management. Ladies and gentlemen, please stay connected while we join the management. Thank you. Ladies and gentlemen, thank you for patiently waiting. We lost the line for the management again. Request you to please stay connected while we join them. Ladies and gentlemen, thank you for patiently waiting. We have the line for the management reconnected, and I would request Mr. Dixit Joshi to go ahead with your question.
Yeah, thanks for the opportunity. Sir, I am attending this call for the first time, so a couple of basic questions. One, what would be our capacity, including both the plants, and what would be the global capacity or global demand?
Gentlemen, I think please read the investor presentation where we have said the global demand of rubber chemicals is 3.5% of the global rubber consumption. So if you take 30 million tons as rubber consumptions today, we are looking at something like 10,50,000 tons of rubber chemicals global demand. That's point number one. Insofar as NOCIL is concerned, we have capacity of 1,10,000 tons installed capacity. It includes finished goods and intermediates.
Okay. And one second question is, if we see our FY18 and 19, the EBITDA margins were almost 27-28%. Obviously, so is it fair to assume that our per ton margin, absolute margin is fixed, and that's why as the prices have gone up, the EBITDA margin has gone down, or there is some pricing pressure as well?
Gentlemen, I think when you are looking at FY17 or FY18 or FY19, those 3 years were area where we had anti-dumping duty in the revenue parameters, which constituted about 45 crores per annum. So you may have to exclude that to arrive at the EBITDA margins, number one. Number two, as far as the EBITDA margin, it's a reflection of market situation where the supply is equal to demand or supply is in excess of demand. It's a common economics that whenever the supply is in excess of demand, you will have the margin pressure because each player will not behave the same way one can expect. Every player can behave differently and adopt a different strategy. So I think that is what we can give guidance here.
Okay. Thank you. That's it from me.
Thank you. The next question is from the line of Damodaran Kutti from Acuitas Capital Advisors. Please go ahead.
Thanks for the opportunity and congratulations for a good set of numbers. Most of my questions have been answered. There's just one question on. So if I look at your COGS growth, which is around 56-57%, and if I tie that to basically aniline prices, which have been broadly stable on a year-on-year basis, so can you reconcile why the sharp increase in COGS on a year-on-year basis?
I just did not follow your question. Can you repeat the question, please? Sorry.
Yes, sir. So if I look at your cost of goods sold, that has increased by around 57% on a year-on-year basis. But if I look at the aniline prices broadly on a year-on-year basis, they are somewhere in the range of 5 to 10% increase on a year-on-year basis. So can you just reconcile why the difference between this COGS growth of 57%, whereas your volume has only grown by 16%, and the aniline prices?
Gentlemen, we are not only consuming aniline, we are also consuming solvents. We are consuming nitrobenzene and other inputs like caustic, carbon disulfide, and so many parameters. So I think it's not fair to judge a raw material cost movement by a single item called aniline. It's a composite of several items.
Right. So those items have seen a much sharper price increase. Is that what we can infer?
Can you just repeat? I'm sorry, we are not able to hear your audio clearly. I'm sorry for that.
Hello? Is it better now?
Yeah.
So what I was saying is the other items that you mentioned, that has contributed to the sharp price increase, what we can understand.
It is there.
Okay. That was it from my side. Thank
you.
Thank you. The next question is from the line of Bhargav Kudade from Kotak Mutual Fund. Please go ahead.
Yeah, good afternoon, team, and thank you for the opportunity. So clearly, NOCIL's competitiveness in the export market has been improving. Is it possible to quantify if we've moved up the ladder? I understand there are L1, L2, L3, L4 suppliers who are supplying to customers. So if you can sort of highlight on this.
I think it all depends on the strategy with each customer. What we endeavor is whenever a customer is having a long-term relationship with us, we take a view from that perspective and then gradually move up the ladder. So maybe we may start with L4, then thereafter we move to L3, then go to L2 and L1. It's a long journey because it's not only pricing is one part, it also involves a weightage of several products which we are ready to offer, along with the quality and the commitment on delivery schedules. That's very important. So one of the key things which today every supply chain cell is looking at is how assured the reliability of supply chain. And on this front, NOCIL has a proven track record. They are sticking to the delivery schedules, commitments. So that helps NOCIL to win larger contracts in the export market.
So, sir, is it fair to say we've moved up the ladder or no?
Yeah, we have definitely moved up the ladder.
Okay. And sir, how important is the share of value-added product portfolio also in determining whether we move up the ladder or no?
See, we have been communicating that we are generally about 25% revenue stream is coming from specialty applications. And we intend to maintain around that. Maybe if there is a scope to expand further or improve further, we will definitely encash those opportunities. But at this stage, we are around 25%.
And lastly, sir, amongst the non-Chinese suppliers, would it be fair to say after them will be the next in the line in terms of the ladder?
In terms of the capacities and ladder, I think in terms of an all-round product portfolio, I think NOCIL stands out number one in the world, I would say, because we are there in every aspect, every product, including the, if you see the self-sufficient intermediates, which is a key aspect in this supply chain of rubber chemicals to the customers. So there, I think NOCIL will stand number one or number two, we can say it. But as far as non-Chinese players, yes, there are two major players, Lanxess. Lanxess has one dependency on China for their intermediates, whereas Eastman, which has been sold to One Rock Capital, or what is now known as New Flexes, they are in a single product portfolio.
Okay. Great, sir. Thank you for the clarification and all the very best.
Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Aditya Khetan from Smith Limited. Please go ahead. Aditya Khetan from Smith Limited, the line has been unmuted. You may go ahead with your question.
Yeah, thank you, sir, for the follow-up. So there was a news recently that the United States is planning to remove duties on some commodities imported from China. And we know that in rubber chemicals, US has imposed an anti-dumping duty on China. So now if that duty is removed, can we again see that Chinese flow increasing to US and how this will impact NOCIL? If you can tell us in brief on this, sir.
We don't have the updated list whether rubber chemicals is included in this or it is being considered, number one. Number two, independent of that, today we are not getting that 25% benefit when you are selling to the export market in US. So for us, whether today when a US customer is looking, he is looking at what cost he is buying it. He is buying from Europe, say 100, NOCIL maybe 105, and China maybe 131. So for us, it doesn't matter much. The only thing is during this Chinese absence, we have established our credentials much deeper, and that's why in the US market we have grown in an index level of 100 to 300 over the last 3 years.
Correct. So volumes definitely has ramped up from 200 tons to around 2,000 tons. Now with the US and other global markets, so might slipping into a recession and demand taking a hit, and if suppose this duty also would be removed on rubber chemicals, so how you see that US market to shape up? And also can we change our strategy to focus on domestic rather than on exports, considering if the global markets take a hit on demand? So domestic demand would be robust, considering that the tire players have announced a good capex. So how that strategy would fit for the next 2 to 3 years?
See, once you establish a relationship, I don't think so we are out of that business ever. It's a competitive world. There will be the relationship will involve some element of commercial transactions going through, and we don't see. What may happen is the further growth potential may get hampered to an extent because of Chinese competition. We are not denying that, but that doesn't mean that the existing volumes will be lost. It will be retained. Maybe we may consolidate at a slower pace if at all if there is a competition, a very aggressive competition from China. That's number one. Number two, it depends on how the rubber consumption grows over the next few years. And if there is no additional capacities, then we are there for that.
Okay. And sir, what was our target into US to take the volumes to maximum levels? Like previously, we had stated around 4,000 to 5,000 tons. So, is that maintained onto the volume side?
I don't think so. We have ever given any volume targets in the US market. Any of the markets, we have always been communicating on index parameters on US market. 100 to 300 is what we have been communicating. If at all if there is this communication from somewhere else, please remove that doubt from your mind. And we don't want to specify what targets we have in any markets.
Okay. Sir, just one more question if I can ask. Sir, onto the exports part, sir, we have reached around 36% of sales in FY22 and that is almost near to our guidance of 40%. So if we cannot push some value-added products into international markets further, how you see that value addition or that specialized portfolio, which is 25%, will move up or it will remain at the same levels for the next 2 years?
I think we answered this question just a few minutes back, where we said our endeavor is there to move further. We would definitely like to move up the ladder. But as it stands today, we don't see beyond, it will be hovering around 25%. Because in the overall scheme of things, this specialty applications is not even 10%. It will be less than 5% probably. So as against the 5% of the globe, we are already 25%. I think we have already reached to a level. I think unless we see further deepening or further opening of new customers, new account relationship, to grow for beyond this, it will be a little difficult, I would say.
So no new products are being developed right now, sir, into our R&D pipeline?
There are some in the pipeline, but this is not getting into the commercial mode so far. As and when we get into the commercial mode, we'll communicate about the same.
Sure, sir. Thank you, sir. That's it for me.
Thank you. The next question is from the line of Dhruv Muchal from HDFC Mutual Fund. Please go ahead.
Yes, sir. Thank you so much. Sir, would you have any sense on what would be the Europe's total production and their share in global trade in rubber chemicals, in particularly our set of products?
Europe demand will be about 12% or 11.5% of the world market. And on the supply side, I think they will be about, we are talking about Europe incorporated entities. They may have plants across the globe. But when you're looking for Euro incorporated entities, they may be about 15%.
Okay. But any sense on what is the absolute physical capacity in Europe? And are they big exporters?
Yeah, they do exports. They do exports to US also, because the US has a preferential duty-free arrangement with Europe. So obviously they have a good access to US market.
Okay. But so on the physical assets, probably in Europe, any share on that if you have?
Physical?
15% production is of European-based entities, but facilities which are in Europe, any sense?
Maybe about 10% thereabouts. We can just guess. It's a guess. We don't have the full split up, but I think around 10%.
Okay. Sure, sir. And so secondly, last year, if I see our share of exports were FY22 as a whole, the share of exports was about 36%. And I believe you also mentioned in the last call, the share of volumes is also about 35%. So that effectively means that the domestic broader realization is equal to the export realization. So is that because of the benefit that we have something in the domestic market because of duties that the realizations is the same? Because I thought what you export is relatively more value add.
Because what happens is the component of the product mix. So if the product mix has high value products in export as compared to a domestic market, obviously the weighted average realization will be much different than the domestic market. So what happens is on a comparative term, yes, if you are looking at a same product, identical product, exports in revenue parameters will be lower as compared to domestic because of the duty protection. But what is happening in an export market is we have the high value products and that gets the weighted average takes the basket up.
So that's what the point, sir. So in value terms, your export share was 36 and volume terms, your export share was 35 last year, FY22 as a whole. So it seems, it's equal.
Maybe, it may be coinciding, but what we are saying is we have to look at independently the weighted average, the composition of the product mix, and the weighted average realization per kg. And Generally, what happens is in identical product, exports generally on the lower side. But as far as NOCIL is concerned, because of our product mix, we are able to maintain that.
Got it. Sure, sir. Thank you so much and all the best. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the follow-up. Sir, we have been, everybody manufactures similar set of products. So is there further scope for optimization by including, say, digitization or Industry 4.0, anything from the existing set of products? Thank you.
This basically, Rohit, this optimization continues to be a part of growth. So obviously, when we put up the plants at Dahej was a much better optimization than what we had in Navi Mumbai. And as we walk in, all these things which you are talking of, like Industry 4.4, they will continue to get incorporated in the new plants.
Right, sir. And from the market share, so last couple of years we have gained a good amount of market share from about 35% to 42-43%. In historical, going back a little bit in the history, generally this market share gain is irreversible, even if there is some relative from China or new volumes come up from China. Do we, have we in the past seen that we have been able to maintain the same market share? Thank you.
I think we are certain that we will be able to maintain the market share.
Right. And just one last clarification on the earlier participant's question. In terms of the Europe's capacity in rubber chemicals, so have we come to know that because of the particular challenges in Europe, any of these capacities have been suffering or probably operating at lower levels, and that may be a positive thing for us or the other competitors? Thank you.
I think, Rohit, if you're talking of European situation as it is emerging, I think the clarity will come when the winter starts. And what is going to be the priority of each government in terms of their energy to the domestic and the energy to the industry. So at this point of time, I think it will be very difficult to guess.
Sure, sir. That's really helpful. Thanks a lot. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. SRDO for closing comments.
Thank you. I take this opportunity to thank everyone for joining the call. I hope we have been able to address all your queries. For any further information, kindly get in touch with us or the strategic growth advisors or our investor relations advisors. Request all of you to be safe under the given circumstances. Thank you once again. Thank you.
Thank you. On behalf of NOCIL Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.